Welcome to TradeTheNBA.com. This is Jonas. Reports for the 10th of May. Well, the other day, just modest fill back. I mean, we're not getting a whole lot of excitement here. We've got a lot of extra short activity, so we got a lot of selling into any new buying that's taking place. Seeing a sharp uprise here on the DOC of our orange. So until that spikes lower, I would expect that we're still going to have some headwinds there. You do have rising red, but it hasn't reached the peak of the previous high. And if it starts to roll over in this one, then I would expect that we'll fill back a little bit further into the current setup, probably down towards the support levels. And of course, NASDAQ already so high up, there's plenty of room. And even if you pull back, I know we got CPI numbers coming out, and that it'll be interesting to see where that puts the perception, because again, the Fed hasn't relented at all. It hasn't caused the collapse that so many were predicting, at least from a bond market and things like that. They got it completely wrong. And you can see the effect of it. They're having to self-correct now. That's going to fill in the gap from all the way back over here, but it was clear with the MBI white spikes. Every time they've happened, it maybe takes a few days, but eventually it works out. And so that's the beauty of seeing that kind of signaling. I think it's just helpful. Oil pushing its way back up into the relevant range, early low 70s. It's just not staying consistently low long enough, and I think that really is the real test. If they're able to keep oil lower in the mid-range, I think they can stave off a lot of the problems that the rising rates have caused until there's time for that to normalize. But that's going to take another 6 months until the later half of the year to really have an impact. And you're going to start now seeing the effects of the rate increases that have been taking place before. And we'll see how that starts to play out, because obviously this is not doing so great from a regional bank standpoint, because all that wonderful treasuries that they were buying at, no 0.12%, now they're upside down big time, and someone's got to write that off somewhere. So they're paying for that short-sightedness. It was just an odd investment in the first place, but that's in the past, and now you have to deal with the consequences of it. The euro still extremely elevated here, right within that comfort range, no question about it. Hyped up, but I think that as you see banking situation develop in the U.S., it's going to spread. It'll be a lot more severe as it starts to really take a greater hold in Europe, because the situation for most, if not all, European banks is a disaster. And from a gold standpoint, I think that still puts the pressure to the upside for gold. I know we had the MBI white spike. Typically, that would call for a move back towards the 50%. Doesn't have to happen immediately, but at minimum, I would expect the positive extreme that was here, that already gotten filled, to be taken out. And at the worst case, the dip below the red line, which was all these that were filled in. So I don't think there's any case that requires major retrace gold at this particular point, especially given the realities of what we're seeing in the real world. Gold's still relatively cheap. Throw that into your cryptocurrencies as an alternative. And again, this is where this is that you don't have this gold market, this crisis of confidence, which you get with Bitcoin and some of the others. They still haven't worked out some of these control issues, and until that gets finalized, you're still going to end up with people having that skepticism. It's like, why they can get their act together, who knows? It's strange. There's been more than enough time, but if you're that decentralized, it's hard to get things put together. ETH likewise is going to perform identical to Bitcoin, so I would still think that gold is probably going to outperform all of them at this particular stage. We'll see how that goes. The difference is the beta factor of the cryptos can accelerate quite rapidly, and particularly given limited supply. Certainly makes an impact. From a 50K standpoint, like we talked about before, we had the positive extremes that already were filled the other day. We have couple further ones a little bit lower, so wouldn't be too hard to see those get hit. We're not seeing a strong move from an MBI white setup, and what we did have the spike before, you had magenta leading it, so it really wasn't all that strong. In fact, not really strong enough to even get a move back towards 50%. Now you see the 50% rising, so we'll start to see that range narrow when it squeezes again. I always look for that when the Morganacci start to get a little bit tighter. That's when you get an explosion move, and just have to wait for it to unfold. And some are starting to suggest that we're going to be in a narrow trading range, and it's not going to take much. You get a situation like you had just the other day where Russia and a Polish jet in the Black Sea, why Polish jets there or whatever, but these kind of tension related things can cause a major upheaval and escalate things quite rapidly. It only takes one error, and yeah, we could have some real volatility spike, and particularly when the greatest offensive is supposed to take place here in the next couple of days. I think that the tensions between the West and Russia and that start to escalate, and it could throw a whole lot of things. And then you step up from Iran or something, and it really can start to affect markets in a tangible way, because that disruption potential exists, and particularly more for Europe, but certainly can throw a monkey wrench into a lot of things if tensions start rising. And that assumes, of course, that the U.S. doesn't have any debt ceiling. Love that from TS. Anyway, trade well. We'll talk again later. Have a good one.